secondary stock market. Oh, man. Woo!
Oh, boy. What is a Thursday night without a little bit of LaFufu bashing? Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. It's a lot cheaper than Jeremy's Curse Brew. And we got to follow up, see what's going on with Smile Direct Club. Now, if you don't remember, old Jeremy Lafifi, my favorite punching bag, was a huge bull on Smile Direct Club. But it was one of my more riskier stocks, he said. It's one of my more riskier stocks. And I did about 10 seconds of DD. And I quickly ascertained that this is a trash stock. So we're going to go ahead and look at the financials of the company, both on a broad perspective, and then we're going to go look at the 10Q, their most recent quarterly report, and we're going to talk about their debt. And we're going to talk about how stupid it was for whoever lent them the money to give them their money. You'll see what I'm talking about. So let's go ahead and check out the financials. So Smile Direct Club is like this kind of rip-off of Invisalign, where you want to get your teeth fixed, but, you don't have a lot of money. So what you do is Smile Direct Club, they'll send you a kit, or oh shit, almost lost my camera there. Low quality here. They'll send you a kit, or you can go visit like a Smile Direct Club place, and they'll get measurements of your teeth. Then they'll send that into the lab, and then they'll send you basically a kit to align your teeth, to make your teeth look pretty. Well, the concept sounds good, right? It's exciting. It's going to disrupt, Not many people have access to orthodontics, apparently. It's expensive. This is a disruptive stock, right? Well, let's go look at the performance. So over the past 5 years, the stock is down 95%. And it's only been actively trading, it looks like, since September 9th, 2019, when it was $18.68 a share. Now, I don't know who did the DD on this stock, but I'm really shocked that somebody would be willing to pay more than nothing for this company. So let's go ahead and look at the financials. So I like to look at the quarterly, and you can see the most recent information, the year-over-year change. So we can see revenue year-over-year has massively declined. Now, think about this, ladies and gentlemen. Jeremy had a theory that people would come out of the pandemic and decide to get their teeth fixed. And the reasoning was, well, you're wearing a mask, so you don't have to worry about, showing off your disgusting, nasty, yellow, rotting teeth, and you could wait. Well, now masks are gone. And his bull thesis was, people are going to start getting their teeth fixed. Well, I have a counter argument. People during the pandemic got a lot of money, free money from the government. I myself got $5,000 as a tax credit for my child. One kid. I got multiple stimulus checks. My wife got multiple stimulus checks. And if my daughter had been born in the correct year, I would have had $5,000 more given back to me by the government. That's a lot of money. So if you were waiting to get your teeth fixed and you're stuck at home, wouldn't you have done it when you had a massive influx of money? Let's say you dreamed of fixing your disgusting teeth. Well, the government just gave you thousands of dollars. That would have been the perfect time for Smile Direct Club's Revenue My Avenue to moon. And you can see they had some pretty impressive year-over-year growth in the second quarter and the first quarter of 2021. I don't know. But now that the stimulus checks have run out, the generous federal unemployment benefits, have run out, the revenue is massively declined. Now, there's nothing more exciting about a growth stock than just to see declining year-over-year revenues. And we can even look at the annual revenue, and they had a spike. They had increases in revenue all the way to 2019, and then it's been a decline every single year thenceforth. Now, here's the number one issue with Smile Direct Club. They have a debt time bomb. That's right. So a quick analysis of the balance sheet. Remember, if you go to this website, you always want to click on the quarterly, and I almost just made that mistake. You want to click on the quarterly because that shows the most recent balance sheet. And remember, we're now in September, late September, so this is out of date. And I would hazard a guess, unless they've gone into more debt or issued more shares, or they've somehow collected a bunch of receivables, their cash balance is even lower. So we can see their total current assets, which is mostly cash and receivables, is $391 million. And their total current liabilities is $145 million. They're not going to go out of business within a year, according to this. It's entirely possible, but when you check the current ratio, you always want to look and say, do they have the cash equivalents to collect their short-term bill, pay their short-term bills? In this case, it looks like they do, at least for the next year. Now, the first major red flag that I see is I'm looking at total long-term assets. And we have about $234 million of property, plant, and equipment. And we have total long-term assets of $308 million. I like to see total long-term assets be more than total long-term liabilities. Because if you think about it, you would go into long-term debt to make an acquisition or, some kind of investment, or you would go into long-term debt to secure long-term assets. But when I look at this company, I see $308 million of long-term assets, and this can't be net of, it is net of depreciation, but I don't think it's the depreciation is the problem here. We look at long-term liabilities, $804 million. So they have basically 60% less long-term assets. It's almost like owning a home, and your home is worth, or your book value is $250,000, and you owe $600,000 on the home. That's basically Spa Direct Club's position. They have a massive debt bomb, and it is right here under long-term debt. Now, the question is, when does that debt mature? Because long-term debt is a year or more out, but what happens is, on a balance sheet, once that debt approaches maturity, it goes from long-term debt and it gets moved to short-term debt. So these total current liabilities, whenever this bond, this debt instrument is going to mature within a year, this $804 million is going to be reflected here. And then their current ratio gets turned upside down. Then they're massively underwater and they're about to go bankrupt. Now, before we go look at the debt, and it's just so funny how stupid the people were that lent them money, and you'll see what I'm talking about. Who lent them money? Let's go ahead and look at shareholders' equity. So apparently, they have positive shareholders' equity. I didn't think that was accurate. Hold on a second. Let's go and look at the balance sheet again. I thought they had negative shareholders' equity. Now find the balance sheet. Think about, I don't know, farts. Yeah, here we go. So they're actually, this is why it's always good to check the quarterly financial statements themselves, because sometimes these websites aren't accurate. So we can see their total equity is negative $258 million. The shareholders have been wiped out. This company owes more money than the net book value of its assets. Think about it. Would you rather have more assets and less debt, or more debt and less assets? I'd rather have more assets and less debt, but that's just me. Now, what is contributing to this total equity? Well, they have an accumulated deficit of $338 million, which means they have had accumulated losses, and I don't think they've paid any dividends, and I don't think they've repurchased any shares. So that's probably all from losses. $338 million of accumulated losses. They just lose money and lose money and lose money and lose money and lose money, and it stacks up. Retained earnings tracks that. And then they have non-controlling interest here, which is actually a pretty hefty number here. Now, a non-controlling interest is, something that it's you don't own the entire entity. Basically, when you acquire another business, sometimes you have what's called a non-controlling interest, where you still have to account for them on your balance sheet because you don't control the entire company that you own. So I'm actually curious a little bit more about what that is. But we can see their total accumulated equity is negative $258 million, which is freaking bad. So all the assets from this company have basically come from shareholder contributions, basically. because the company's not making money itself. If you see a retained earnings balance that's positive, that means the company has had net accumulated profits. If you see a negative number, they've lost money overall. And all the equity has come from shareholder contributions, which is not freaking good. Okay. So let's go ahead and look at this long-term debt that we're talking about here. Now, these notes, the vast majority of the debt matures in 2026. So right now, Smile Direct Club has some breathing room. But at some point, it's going to creep closer and closer and closer until that debt is come due. And the funny thing is, these senior convertible notes give the debt holders the right to convert their debt instruments into shares of stock, which could lead to massive dilution. However, here's what made me laugh my absolute butt off. The initial conversion rate for the notes is 55.37 shares of Class A stock per $1,000 of principal amount. So basically what these debt holders can do, because they lent Smile Direct Club money, but they have this option to say, okay, I want to convert this debt that I own to shares of common stock. And I spell it out here in the next sentence, but for every $1,000 of principal, they can convert the notes into 55 shares. So we take 55 to 37. So if they got 55 shares, basically they almost paid for those shares $18 per share. The share price is $1. Only a raving idiot would, like Lofufu, would convert their debt to shares of common stock when the implied price of the share is $18.06. This is bad. Now, I don't know what's going to happen. Maybe we come out of this and Smile Direct Club, starts growing revenues and they start generating operating cash flow, which we'll go look at in a second. They're not. And potentially, they can refinance this debt because the debt's coming due and I don't think it's going to be converted into common shares. Why would you do that if it was a penny stock? Like literally it's in the pennies. Why would you convert that? So what's going to happen is this company, I think, will probably go bankrupt in 2026. And if they don't, because they can issue more shares, I guess, but that would be an insane dilution with the current stock price. But if they can't refinance this debt because nobody wants to lend them money, because look what happened to the last lenders. I just can't believe it. They could potentially go bankrupt. So they're not going to go bankrupt right now, but it's a ticking time bomb. And I think the market realizes that. Oh my God. Now, if we go look at the operating cash flow, look at this. Negative operating cash flow. Negative. And of course, they have to do capital expenditures. So their free cash flow is just absolute freaking trash. Negative 78, negative 80, negative 76, negative 35. So they're in this situation where they're not generating cash from their business. It's absolutely horrible. And if they want to keep expanding their business, they're going to have to keep making capital expenditures. But you can see capital expenditures are starting to trend down as well because they can't burn this cash that quickly or they're going to go completely freaking bankrupt. They're going to burn all their cash. So their cash burn from operations is roughly 6, 12, 18. Yeah, about $6 million a month. And then we go look at their, this might be a fluke right here because look at the prior months. You could even average this out. Let's look at the annual. Let's look at the trailing. Trailing operating cash burn, $161 million. So they're burning, as of right now, $161 million a year. And their cash equivalents are roughly $158 million plus accounts receivable. So it's going to be close. I don't even know if they can make it, if we even have to worry about it until the notes mature, because they might even go bankrupt before the notes mature, just based on the cash burn. I mean, if all works out and they can collect all these receivables, okay, maybe it can last 2 years, something like that. This is not good. Okay, this is very, very, very bad. Whoever recommended this stock, Jeremy, you're a freaking idiot and a loser. I have to make fun of you. I'm going to keep in touch with all the stocks, see what happens. It's on Amazon. Growth by oath. It's an oath. Like I make an oath to buy growth. BLK? What is that? I blew a hydraulic line on a tractor and Tesla crashed today. Echoes is too bearish. I hope he shorts everything I touch. Why are we talking about Echoes? We're talking about Smile Direct Club here. I used a Invisalign in 2015 and then wasn't fully happy and later used Smile Direct. I paid $5,500 and then $2,000 for Smile Direct. I honestly thought it was fully worth it. I mean, the product, it seems to get like good and bad reviews. But at the end of the day, it doesn't matter how great the product is if the company has declining revenues. Obviously, something's going on there. And they're massively unprofitable and they're burning cash. And they have this massive debt load that's slowly creeping in. 2026 is going to be here before you know it. Stimmy my Jimmy. The product works. I just don't know how to run the business. Yeah, I mean, if they can turn the business around, okay, great. But they're going to have to cut some serious costs. And they still have that debt burden to worry about. I just watched Jeremy Smile Direct Club. Strong capital position. Yeah, more debt than assets. Everyone says it's going to $1. I bought because expectations are already so low. It can't go any lower, guys. It can't go any lower. Non-controlling interest probably in tattoo chip. Yeah, that non-controlling interest balance was huge. You might want to look into that too. If we learn something about shareholders provide the most liquidity. Will Smile Direct's clock get delisted and traded because it's below $1? I don't know. I just know it's trash. I don't make predictions like that. I know I call out trash when I see it. There's no God but Jeremy, and I am his prophet. And once again, you know, you guys bought the stock, and Jeremy's just sitting in his mansion. He's got his feet propped up. You know, Amit's giving him a fluff, a meat, and he's just having the time of his life. Oh, boy, he's loving it. Oh, the horror. Jeremy's a pure definition of a swindler. He has brainwashed a herd. This is why I give up hope, ladies and gentlemen. There's just no hope, okay? I can do my little grift. You know, I can make fun of Jeremy and make, you know, a fraction what he makes. But, you know, you just be a scammer and make a lot of money. You lose people a ton of money. Claim you can get 30% returns per year. And people you just get rewarded for it. Welcome to reality, guys. Hey, Strongman, love you, but hope you got my comments. You're a true, loyal, real one, homie. Your comments. I mean, a lot of people comment. If I miss your comments, I'm sorry, but I might get crazy and buy one share. You go right ahead. Do whatever you want. Maybe Jeremy will do a 10-year thesis on Smile Direct Club. Thesis, my thesis. He makes it so easy. Like why not buy like profitable companies and then we can have an argument? But he just buys trash. Low tattooed chef inventory, my local Target. Good sign. To the moon. Yeah. Or maybe they're just letting it sell out and they're not buying more. I'd love to see inside Jeremy's mind. Does he sleep well at night? Oh, yeah. He just bought the dip and all these other on these stocks. He got his YouTube check. See, our YouTube checks come in on roughly the 20th. Yeah, so I guess he sat on his YouTube check a little bit and he was like, oh, stocks went down. Bye, 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 bye. Do you think Jeremy wears Sprite Tack pants? That would be amazing. Maybe. All right, guys. Strongman's freaking tired. But I'll give you a LaFufu outro because why not?
Bye, 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 bye. I know I'm a grifter, strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla, my Esla, and you, strong man.